Quarter end, markets continue to move higher. Most importantly, market breadth is expanding. It's not just the Magnificent Seven anymore. That's a good sign, okay? But are there other signs that we're concerned about, or can this market continue on? Lots to talk about. Sit back. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor, so what you hear here, I do apply to our models and portfolios. Besides market updates, we're doing educational videos, shorts, podcasts, you name it, so please do consider subscribing and hitting that like button. So, as I mentioned in the opening, yes, markets move higher. Market breadth is getting better. That is a good thing. But are we overstretched? Yeah, pretty much, right? But is there anything that can slow down, stop this bull market right now? We're going to see. So today we're going to talk about just that, the technicals, the charts, a little bit of macro, and an update on what's going on in the options market. So let's go to the big board. So on the investment side, okay, we have a process that includes three different things: macro, technical analysis, charts, and then options, all right? Now, when we look at that, the first thing is on the macro side, we look at different cycles. And right now we see that we are going into what's called cycle 2. Growth accelerates, inflation accelerates, very similar to what we saw in 2021. So that's a good thing. Now, on the growth side, the yellow is consensus, blue is our research firm Hedgeye. Okay, but overall, we're still looking at a 2.5%, okay, as we go forward on GDP. So that's a good thing. Now, when we look at all this data that we get, and there's a lot, all right, we can see that a lot of these items have actually bottomed out and they're turning up. I'm showing durable goods, right? If I zoom in, you can see a bottom, a little bit of it a move to the upside. I could say the same for capital goods. ISM is manufacturing. Global manufacturing. So again, we're seeing all of these at a bottom and are starting to grow again, which is a good sign. Now, not so good is on the inflation side. So I'm showing the commodities index here. We're seeing it in oil. Have you seen the cocoa chart lately? It has gone straight vertical. So many different commodities. So we are seeing that prices are increasing. So that is not a good thing. And today we got PCE. Now, some people were saying, oh, it's great, you know, the number's the lowest it's been in a while. Yes, that number, okay, came in line. It might be lower, but that is rate of change, not actual inflation. This comes from Truflation website, and we're at 24.37%, right? And that's average, right? Forget about some of the items are way more than that we know about. So inflation is something we're going to see. So if it stays stickier, right, if it's going to stay stickier, higher, then the Fed, that's the last piece of our puzzle here, is going to keep rates higher, right? We don't expect them to cut, if anything, until later in the fall. Now, the biggest thing we've seen from the Fed Treasury, all right, is what's called loose financial conditions, all right? Now, this is not loose like it's easy to get credit or something like that for you and I. We'll talk about that in a second. But what you see here is we peaked a year ago. That was the bank crisis. And then the Fed and the Treasury came up with all these different programs to create loose financial conditions, right? And that that money is sloshing around the system. And you can see, even from the beginning of this year, how much it's gone down. And most recently, we had this budget that was approved. We're going to see another $3 trillion deficit. Throwing money out there like crazy. And that obviously is going to create loose financial conditions, and the market's like that, all right? So just something we have to continue to keep an eye on. Next up, we're going to do some macro call-out. So macro call-outs are just a couple items that I'm looking at. Obviously, I have painted a pretty rosy picture so far, but there's always some things out there that I'm looking at, maybe concern me, and could it change the direction of what we're seeing? So the first thing is the unemployment picture. We're seeing a lot of layoffs in the news every single day. There's a guy on Twitter, Macro Edge, that puts out great numbers, right? huge numbers in January, a little less in February, but we are seeing a lot of layoffs. Now, what you're seeing here is the gray line is NFP, so the government numbers, and then you have the household survey numbers, so true numbers. And there's a disparity of 3.69 million. That's a big number, okay? So unemployment, and Powell talked about that today in his speech, something that could change some of their planning. So we talked about loose financial conditions, but for the consumer, it's really tight, all right? So economy is fantastic unless you want a job, a house, or a new car. So we know what's going on in the housing market. Obviously, rates are very high, higher for longer, all right? Home costs are out of control. I mean, what you need to make today versus just a few years ago, it's priced out a lot of the younger generation. It's a problem. And then cars, a new car, there's a lot of deals out there right now. You might be able to find a deal, but they're still very expensive, right? You might get a finance deal. But used cars, you're talking between 11 and 13%, lines of credit 10%, credit cards 28%. So big time numbers there. And retailers turn to extreme bargains to lure shoppers back. So we have seen some uptick in activity. So yeah, the retailers might be up a little bit, but you know we're seeing them go down the opposite way is savings, all-time low. So big issue there. So let's go to the charts. So to start off, I'm showing the S&P. Now the S&P is obviously the most recognized index out there. I think it's way overbought just because it's being driven by a couple names, no longer the Magnificent Seven, maybe the Four. Okay, now I will show there is some breadth. It's getting better in the overall markets, but just be careful because we are very overbought right now. Now this is showing a weekly chart, so I'll look at a daily and a weekly when I'm reviewing everything. You can see the move to the upside. Up top there circled is relative strength. When you're above 70, you're overbought. We're at 79 and change. You can sustain that for a while, but if you go back, eventually it will work itself out and maybe pull back a little bit, okay? So the next thing is the daily chart. If I see anything here that's concerning, same thing, a little bit, right? So here's relative strength. And at that time, you had an all-time high. I've talked about this before. So then you had a lower high on relative strength, new high, and I could go down, right, until Friday. So you had another all-time high, but relative strength continues to go down. So that is a little bit concerning. Now down here is the VIX. We're not seeing much there. We're talking 13 and change. Above 15, I get concerned. So from a daily standpoint, same thing though. It is, I believe, to be overbought based on what's going on, and there's other opportunities that I like better. And the other thing is when you look at momentum, this is called the McKellen oscillator. Now I didn't even color this part because it's been bouncing all over the place between positive and negative. But you can see when the markets are going up, you're going to sustain a higher percentage there overall. And then this year we've been boom, 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 up and down, positive, negative. So that's a little bit concerning / interesting. Now this chart looks good. I've shown this for a while, and I always point out why I don't believe the markets look good. But in this case, I'm seeing something positive. So the blue line here is the NYSE. So we're looking at the whole market. And up top, the histogram, that is new highs minus new lows, right? Companies, new highs minus new lows. And you go back to where in 21, 22, we had some massive surges, okay? New highs minus new lows. But then, you know, if you go across, it's been pretty anemic for quite some time. But I got to tell you, if you look here, it's gotten pretty good in the last few weeks. It's getting stronger. Friday was one of its strongest days, right? About 360 new highs minus new lows. So that is a good sign and improving market breadth as we go forward. So next up, sector spotlight. I always like to start out showing the 10-year Treasury. All right, now a couple things. One, for a 60-40 investor, it has not been a good time to be in bonds, right? As yields went up, prices go down. Not a good thing, right? And we've been seeing that for quite some time. Now, we are in some short duration, 1 year or less, T-bills, because they're giving you some nice yields without that volatility. But not looking at duration at all. And if I see anything here, you can kind of see this as it's going higher. So we're seeing a series of, a little bit different here, right? higher lows versus lower highs I showed you before. So higher lows. So the trend is going up in the 10-year. And with inflation rising, just like we saw in the past, that's what we expect. So that is not a great place to be right now as far as any duration. And there are some other areas, all right? Now, they do come with some risk, preferreds, convertibles, and I'm showing high yield here. You can see high yield had a nice breakout, been consolidating, maybe grinding a little bit higher. But this is an area that I put on my radar to possibly add on the bond side. But again, if you're getting ultra shorts, 5 to 5.4%, okay, do we have upside here? You do, okay. If I were to go out further, you could see there's still some upside potential, but want to get confirmation as we go forward. From there, we talked about this last time, which is China. Obviously, some risk comes with China. I've got two small positions in FXI, which is large cap, and a tech fund as well, and just waiting. Now, you see here at the bottom, okay, when you see what's happened, okay, it shows you basically top to bottom about a 56% downturn. So math will tell you, 112% upside potential, okay. We have seen a move. China is starting to create a lot of liquidity, trying to push the markets. Consumers are starting to spend again. So watching this, staying small until I get confirmation, just because, again, some associated risk with China as we go forward. I talked about commodities, taking advantage of that. This is XLE, which is a ETF for some of the large oil companies. And you can see the move, and then we had a breakout on Friday. We also have a commodity fund that has soybeans and wheat, all those different things, gold, silver, and also energy as well. So it gives us some nice diversification in that sector. All right, now the last one I'm going to show real quick is India. This has been a long hold for us, has been a great move. It looked like it was starting to break down. I was ready to, at the very least, trim it. I waited for a day, and I'm glad I did, because then we went ahead and bounced 3 days in a row, and it stayed on that 50-day moving average and went higher. So we'll see. I think if we get to that all-time high again, I'd probably trim that and position it elsewhere as we go forward, okay? So next up, let's talk about options and game plan going forward. So options is not the easiest thing to understand, so I'm not going to go in total detail here, but a couple things. One, the options market has grown massively. Now, a couple different ways. One, with what's called ODTE, same-day options. 50 up to 56, 58% of daily option activity is same-day options, and that's pretty crazy if you think about the risk with that. But that is moving the markets, okay? And then the overall market in general has just gotten massive. So this is from our partners at Tier 1 Alpha, something I look at every day. I get a lot of data to see what's going on, because the options market can and will move the market. Now, what I'm showing here is a chart, and you have basically what's called negative, neutral, or positive gamma, okay? Now, gamma exposure acts as a throttle for equity volatility. Volatility itself acts as a toggle for equity exposure. So what it means, like here, I went back since I've been using this. When we're in positive gamma for a while, they're buying. So you have these CTA funds, volatility control funds, and they're all done systematically, right? All done with algorithms, etc. And they're buying and selling based on what's going on here. So that's why it's important to track what's going on. The next thing is, this just happened recently, but you have something called realized volatility. I'll put a description below what that means, all right? So here you're showing the blue is the 1 month realized, the orange, okay, is the 3 month realized. Just to keep it simple, again, when that 1 month went over the 3 month, that's a good thing, right? So that gives you, again, another signal to show that they're starting to buy, and you can see it definitively, okay? This shows implied notional flows. Notional is basically the amount, okay? So when you look at it, it's gone straight up. Now, a little button hook there the other day, but vol control funds were responsible for over $25 billion in purchases last quarter, first quarter, right? So when I look at this, and you can see they're buying, right? And then you see the flows of the market as well. As far as signals, that should say positive. All of my signals are positive right now. So the game plan, we talked about cycle 2. So continue to add where I can with inflation assets and looking for specifically some more alpha in some of the different sectors that have some upside potential. But I'm cautiously optimistic because, yes, I think we're overbought. And a 5 to 7% pullback would be healthy, but also would be a really good buying opportunity in some of those names that we couldn't buy in the past. So hopefully that helps. Michael Loftus, Wealth and Wisdom TV.